Hi everyone, Leah the trader here from TMAD. Hope you guys are doing well. I would like to go over our trade log for June and also talk about importance of risk to reward in opposed to win rate. A lot of times traders are too focused on the win rate. It's very important for their ego, for their psychology, you name it, whatever is important for them. They feel like losing is bad, it's hurting them, and they cannot cut losses. They feel like failure, etc., right? It's very bad mindset because I want to show you on this particular spreadsheet that it really doesn't matter what your win rate is if you have great risk management and you let the winners and the trades that have a lot of momentum and potential to go. So this was a perfect example. I really love to show you this month because when you look at here, this is our risk. When you look at the trades, some are 8.8R, 2.4R, minus. Look at this win rate, right? We are currently at 7.8R. When I show you how I count this, example portfolio is 100,000, 50,000, 25,000. 1% is basically 1R, right? That's what you're risking. So that's 7.8% on a month, which I think is it was a pretty challenging month as well. We had a lot of chop there the first 2-3 weeks, and it was not easy to trade. So let's just look at the win rate ratio, right? So we had from all those trades 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 trades. We still have some open, right? So trades. From that we had 1, 2, 3, 4, 5, 6 trades that were winning. So 18 we had 6 winning and 12 losing, all right? As you can see, I don't have to be winning more than losing, but you need to cut the trades. Look where I cut the trades here. These are the R's. I have this formula here. When I click, that is, we built, customize this formula that is counting our R. Why is it so complicated? Because, for example, here, when you see the exits, 50, 66, 56, what is it? So times we went in at 56, we exited 50% of the shares at 66, and then the leftovers at 56 because I trailed stop to break even. That's usually my strategy. It was one day trade, you see. June 12th we went in, June 3rd out. It went insane at stock. When you look at that on the chart, it was right here. We hopped on this trade here at 56. Next morning it was just going nuts. And we had back then, this is a new target now for this trade, but we had our target at those highs. 66, I got out 50% and trailed the stop to break even. And basically then we got stopped out because the stock fall. So that would give us 2.39R, right? Same here, 119 on Datadog, 129.32, 129. And I decided to take the shares because I saw market weakness. That was 2R. And then the rest is sometimes we get stopped out. That's the -1. Sometimes I trail the stops to break even. Then it gets stopped out. And then sometimes we basically trail the stops after a while, or I see market weakness, I get out when I'm on a little bit. And I just feel like that trade doesn't work for me. All right. So now we have a couple of trades open. So just bear it in mind because it's not always important, right? So here we have also different days, win-loss ratios. You can see this was in January. You know, that was our basically our risk reward. So don't stress yourself really if you have the win rate that's, let's say, 70% you're losing. It's okay. Just make sure that you get out of the trade when you are wrong, you're losing, and do not make this 5-hour, 6-hour, 10-hour loss, because it's really hard to get back if you do this and you let these losses accumulate and become monster losses. All right, so that's pretty much it for today, and I will see you soon, guys. If you want to trade with us, tradingmindsetandData.com. We have amazing tools in the Discord that we share with our members, and we have pretty good group of international people there. Yeah, join us. Bye.